What's going on, traders, and welcome back to another YouTube video. So, as it says in the description or the video title, today we're going to be talking about the where is more important, right? So, in trading, a lot of focus is put on strategy. A lot of focus is put on whatever type of strategy it is, right? A lot of focus is put on understanding the theory and so forth, right? And it's important to understand that no matter how much you understand the theory, until you understand that the where is way more important than the what, you're going to find inconsistency in your performance. Now, note, I did not say you're not going to be profitable. I did not say you're not going to make money. I simply said you're going to find inconsistency in your performance, right? Because what you will find is that you have a setup or you have an understanding of what your setup looks like, and you go into the marketplace, you find your setup, you take a trade and it works out, right? You go in again under the same premise, under the same circumstances, you take the same trade and it doesn't work out, right? Now, it's very important that in this instance you understand that those two happenings were separated by one simple thing, which is where. Where did the setup happen? Did it occur under the same exact circumstances, in the same area, in the same zone, at the same price point, at the same Fibonacci level, or whatever it is, right? For me, when I focus in the marketplace, and we're now going to start drawing, right? So when I focus in the marketplace, it's important for me to focus on the fact that where is something happening. So let's say, for instance, I'm looking at trading a double bottom, right? So I'm looking at trading a simple double bottom with a break and retest of the neckline. Now, what I need to see, so this is now my setup that I'm looking to trade. It's important to focus on the fact that this can happen anywhere, right? It can happen anywhere. It can happen in the middle of an impulsive range. It can happen at the top of a range. It can happen at a resistance. It can happen at a support. It's important to focus on the fact that I need to understand the where that makes this a higher probability setup, right? Makes this a higher probability trade. So simply just seeing a double bottom with a break and retest, or forming another double bottom before price going up, or whatever it is, a bullish engulfing candle, or whatever it is, simply just understanding that I'm looking for this is not enough. I have to now have a catalyst underlying this that leads to creating a more refined approach. So I'm able to understand with much more certainty what's happening in the marketplace, right? So when I now say, okay, I want to see a double bottom happening at a, say, a higher time frame level of support, right? So say we have a higher time frame level of support in this area. I now want to see a double bottom happen at a higher time frame level of support. Once it breaks that neckline, I want to see it trade back into the range or pull back, right, in for whatever reason. And this pullback, I don't want it to just be impulsive. I want to see the market sort of pull back in a more compressed manner, right? So this is now creating more characteristics that would refine my approach to this working in a successful manner, right? So I now need to take this back and back test this, and be sure to check out the back testing video where I explain how to go about back testing. And I will do a follow up on that video and get a bit more into that as well. But I now need to take this onto the charts, and I now need to backtest this. So what am I going to be looking for? I'm obviously going to start off by looking for a higher time frame level of support or resistance, right? So that will be the first thing that I would look for. The first thing I need to have on my chart is a higher time frame level of support or resistance, right? This is obviously not something that I'm just going to throw on the chart. When I'm looking for support and resistance, I need to have specific characteristics that I would look for me to define a level of support. I need to have specific characteristics that I would look for me to define a level of resistance. Once I've now found my level of support and resistance, or support or resistance, depending on what I'm looking for, right? Once I've done that, I now need to then drop down to, say, a lower time frame. So I need to see a lower time frame, or let's say a medium time frame or intermediate time frame. So let's say ITF, right? So an intermediate time frame is where I would drop down, and this is now where I am now looking for these things over here, right? So this is now where I am looking for these things over here. So on a intermediate time frame, I'm now looking for my double bottom. So I'm going to put it as DBT or DTP, right? Double bottom or double top, right? So I'm now looking for my double bottom or my double top occurring inside of this higher time frame level of support and resistance, right? Or support or resistance, whatever you want to call it. I don't really trade with that, so it's a bit of a mouthful for me to say it because I don't really say it much. But once I've dropped down to the intermediate time frame, I now need to see this, right? And perhaps double top, right? So I now need to see that. Once I've done that, I now need to drop down to another time frame, right? So now on my lower time frame, which would be the time frame where I'm looking to execute, this is now where I'm looking for what? I'm now looking for this pullback, right? So this pullback after the break of the neckline, I'm now looking for this pullback to be in what? In this compressed manner, right? So I'm looking for a compressed pullback. Obviously, we can have additional parameters to sort of refine this. Perhaps you could have the pullback maybe into a Fibonacci zone, maybe into the golden zone, which is the 50 to the 62%, maybe into a deeper retracement or whatever it is, right? So you could add a deeper refinement for this pullback as to what level you want to see it come back into. Now, if you've checked out the first video that I did, or the previous video that I did talking about how to identify your bias, you'll notice that this is more or less a follow-up of that video. So now that you've defined your bias, you know what your bias is, right? So in that video, we spoke about three things that we would use to identify our bias. The first thing, I believe, was support and resistance, market structure, and liquidity. Right? So those were the three things that we said we would use to identify our bias. If you haven't checked that out, go back and check out that video as well. Once you've identified your bias, so in this instance here, so we've got a double bottom here. So let's just say your bias is now bullish, right? So you've checked out your support, you found your level of support, you've seen your market structure is bullish, and you found a liquidity gap. So you're bullish in this market, right? So this is now your level of support. Now you're looking for your setup. So what does your setup look like? Now we've spoken about a double bottom. Your setup could be a inverted, head and shoulders, right? With a retest of the neckline and then the same thing, right? It could be, I'm not even sure what other patterns people trade, right? It could be maybe the 3 drives into the downside and maybe a break of structure, right? So that could be another confirmation. So whatever it is that your setup looks like. And it's important for this to be a defined thing when you get into trading, whether it is with demo funds, whether it is with live funds. If you do, remember, I do not advocate for trading live funds. It is risky. We do not intend for you to take this as financial advice or trading advice. This is simply my explanation of how I approach or how I navigate the marketplace, right? So if you do take this information back, be sure to do your own testing on your side. Let's get back into it. So you have to have a clear picture of what your setup looks like before you get into the marketplace, so that when you get into the marketplace, you know that, okay, at this level of support, I'm looking for this double bottom with a break of the neckline, or a inverted head and shoulders with a break of a neckline, And once it breaks, I'm looking for a compressed pullback into a level of support or into a Fibonacci zone or whatever it is. And once I've gotten that, I now need to drop down to a lower time frame and take my trade. Right? So on the lower time frame is now where you're going to see what? You're going to see that, okay, you've got a proper compressed pullback. It's not very impulsive. Prices pulling back. And once you see whatever it is, maybe a rejection candlesticks, multiple rejection candlesticks, or a bullish engulfing candle, or whatever it is that is now your confirmation. Remember, the purpose of this is not to essentially give you an executable trading strategy. The purpose of this is to point you to the things that would guide you in terms of building your own successful strategy, your own back-tested strategy that is profitable. It's also another very important guideline as well, is to understand that there's going to be instances where price does not pull back to where you want it to pull back to. In those instances, do not get FOMO and jump into trades that you cannot understand. Therefore, you will not be able to manage. Therefore, you could end up losing money, right? You want to ensure that when you're getting into a trade, you're getting into that trade under a guideline of rules that you can be able to manage, execute, and come out of that trade either profitable or with a minimized loss, right? So I hope there was a lot of good information on this video. I'm trying to keep it as short as possible, right? What I'm going to do really quickly is let's jump into the chart and let's have a look at a few things, right? So I've got the chart open over here, and I've got it as a teaser, so we might as well just get into this chart, right? So let's very firstly, so this would be the weekly chart, right? So now on the weekly chart, we're looking for our bias. So when we're looking for our bias, what do we need to see? Market structure. So we've got higher low, higher high, higher low, higher high. At this point here, we have a break of the higher low, right? But we also understand that this big bullish push to the upside is showing that there's still bullish momentum in this move, right? Another thing we notice as well is that this push to the upside is much more impulsive than this push to the downside, right? So there's still much more volume to the upside of this market, right? So what we could do here is we could have an area of support here, or let's not cheat the system, right? So this would have been the last resistance that was broken, right? And that would be your level of resistance. Price came and bounced, and bounced again, right? So you've got your area of support, your area of resistance in this point, and let's just say that the market hasn't come back into this area, right? So we're going to try and see what's happening in here. So you've now got your level of support that you've now plotted in, right? And since, I'm just going to put a block in here actually. And since none of this has happened, we're going to work with this as the low, right? So this was the low, and for now, this is the high, right? It's not necessarily confirmed because it seems like the next candle broke it. So let's come over. Okay, so we've got a high here. Okay, so we've got a high there. We've got a level of resistance that has been broken, tested, and rejected, right? So we could have been trading here. I'm not necessarily sure how people trade it, whether it's on this first break and push, but generally I know people like to see a nice big push away and then a pullback into that level of resistance, right? So we'll just work under that understanding. So now we've got our market structure in place. We've got these breaks of market structure in here. We've got a level of resistance in here that price is broken and rejected off of, right? So could price break it and pull back into it? I'm not really sure, right? When we have rejections like this off the level of support, does it still hold when price pulls back to it? I'm not really sure. I don't necessarily trade this. And this is the information that you're now going to find by back testing under the circumstance. So you're going to look for instances where resistance has been broken, price has now traded away, but it has got wicks into this level, rejecting your resistance already. So you're now going to try to identify when price pulls back into the zone, is it now going to continue to the upside? So now we've got that. When we see that level being set as a high and price beginning to pull back, this is now when we're beginning to drop down to a lower time frame. When we're on that lower time frame, what are we looking for? This is now a new level of resistance, right? So if we'd like to, we could actually shucks, I'll have to move this away. All right, so this is the level of resistance. Oh man. All right, let's bring this over. There. All right, so now this is the level of resistance. This was obviously before this happened. Okay, so this is a level of resistance. So now we're looking for price to trade back into your level of resistance that it's just broken. And where will your target be? You're looking to enter somewhere inside of here, and you're looking to target that next level of resistance. Why? Because you're bullish on this market. Why? It was bullish, right? It consolidated, it broke structure to the upside, created a high, pulled back and broke structure again, created a new high at that point there, right? So looking at that, you're in a bullish market, so you'll expect price to continue to create new highs. So your bias on this market now is bullish, and you drop down to a lower time frame, you're looking for price to trade back into that lower time frame, pull, right? Intermediate time frame, sorry. What does your setup look like? You're now looking for a double bottom when price pulls back into that area. So we drop down, let's say, to the 4-hour chart. Okay, on the 4-hour chart, you can see that when price broke above the first time, it did come back and give some sort of a double bottom here. It came back and gave some sort of a double bottom here as well. So this was some sort of a setup in here, right? So on that first touch, it did give some confirmations, right? Because what does your setup look like? Double bottom, break off the neckline. Oh wow. So we have a double bottom, right? Break off the neckline, and then you have a pull back into whatever it is, right? So let's just say the Fibonacci, because we've used the Fibonacci on previous examples. So we're going to look for anything between the 50% and 79%, which is a big area, but because you're going to be back testing it, you'll now be able to refine it to something easier, right? So that's what your setup looks like. So now you can see in here, we had we had that trade in, and then we had that break, right? Once we had that break, we had that pullback, which was not very compressed, I would say, right? But it did pull back into that area in there. What can we say, right? So we said we'll look for Fibonacci. So take your Fibonacci, there's your low, there's your high in there, put it at your high, right? And price pulls back into the 62% here. That would be an area to enter. And we said we'll use from the 50 to the 79. So most likely your stop loss will then be, say, at the pink zone or at around that area in there, right? So we move over, we can see that the price traded away from there, right? So that was that first touch. Remember, that's not what we're looking for. I did say your back testing is now going to tell you whether price respects that area of support or resistance on that first touch, right? But anyway, continuing with what we're actually looking for, you can see, okay, price is coming off that high. It's beginning now to pull back, right? So this is now that first pullback into that area of support from that weekly time frame, right? So that's it here. So what can we see in here, right? So price pulls back to the area. Whether we've marked it perfectly or what, I'm not really sure, right? Perhaps we haven't marked it perfectly. We can see price just barely missed it. But remember, the premise of this, we're just trying to understand what's going to happen on that retest. Can we see a compressed pullback into that zone, into that level of support? Yes, we can, right? So we can see that price is beginning to deplete, right? Perhaps price didn't hit our zone, then in that instance, we can still look for what? We can still look for the same thing, right? But in this instance here, we can see price came very close, right? Created a double bottom, right? Broke the neckline, and then had a bit of a compressed pullback in here. Was it deep enough for us to take a trade? Let's look from here up into the high there, right? And where were we looking for? We're looking from 50%, which is right here, 50% down to 79%, right? So that's your entry right there. Without any refinement, that's your entry. Let's just make that light green, and your stop loss will be just below your 79% right there. That's your stop loss. And where did I say your target is? Your target is obviously that last level of resistance right here. Okay, so when price is pulling back here, obviously we have the break of the neckline, right? So when we're looking for this retracement into that break of the neckline, whatever you would classify as the break of the neckline, maybe this was your double bottom with a liquidity grab and a break up, whatever it is, right? Remember, it's not about strategy. But looking at this, you can see we have that break of that neckline. We did not get right back into the neckline, but adding that fib, right? Adding that fib from here to there gave us this entry from here back up into that area of resistance. Now, this was not a perfect example because I have not back tested this for me to go back and look for a perfect example. So we do not have a perfect tap into our area of resistance becoming support in this instance. So you might say it's not a good enough example, but this is where you now take it back and you look at it on the chart, right? So that's it for this video. I hope it was educational. I hope you were able to get some information from it. If there's anything else that you'd like us to speak about, just make sure you drop it down in the comments. Until then, it's been a pleasure as always to share with you guys, and I wish you a blessed and a profitable remainder of the trading week, as well as the remainder of the trading year.